Righto, there we go. Okay, as I said, welcome everybody and thank you for joining us today. I'll just share my screen to make sure everyone can see it. How's that? Can everyone see my screen?
Yes, I can.
Yes.
Oh, good. So I'm sorry to be possibly sitting side on, but I've got a bigger screen here that I can read faster. So yeah, look, firstly, I'd like to thank Snowy Valley Council for inviting us to be part of today's session. We really appreciate it and thank you for the opportunity. So today we're going to be looking at how to recession-proof your business. I'm going to start off by saying that is not an easy answer or question because it is difficult in today's environment. There are so many different factors that do affect business in all areas. Let's click on that. So I'm sorry about the formatting there. We're going to be looking at three areas. One is cash flow, where we're going to be managing your cash flow planning, how to construct a good cash flow, business planning, looking at a SWOT analysis, a TOWS, and a PESTEL, which is more of an external, but a lot of small businesses ignore those bottom two. And diversification. I mean, diversification, it is a key word when you're looking at ways to try and combat what might happen to my business of all the what ifs. So just a disclaimer, I do just have to quickly read that today's session is of general information only. Nothing should be taken as gospel. So everything that I'm talking about today is of a general nature. Everyone's financial and circumstances are different. So of course you would have to refer to your own financial advisor or legal advisor, if that's the case, before making any decisions to do with your business. To the extent of any information provided relating to the acquisition or possible acquisition of a financial product, I've tried to not talk product specific. Happy for people to ask me any questions along the way about anything, and if I can answer it, I will. But I must say, even if I just use the word zero, I'm going to use that as an example. I'm not here to explain the zero package. I might talk about software of, play things like Xero, MYOB, Reckon, QuickBooks and so on, but I'm not here to give a product overview of what they do and what they don't do. They're very similar, they're different pricing, but we go into that. RFCS New South Wales nor its employees, being me, gives any warranty or accuracy. I've done my best or a liability, and we won't accept any liability in any way, including any reason of neglect or omissions in today's presentation. Rest assured, we've done our best to put together the most accurate information that we can. I do, and I'm sorry about this, I've missed a slide and it's my fault, but I do want to recognise our traditional owners, and I want to acknowledge all past, present and emerging. And I don't know the name of your area down there, and I'm very sorry about that. I did have it on a slide. I don't know where it's gone.
We've got Wiradjuri and Narrego in this area.
Okay, Wiradjuri and Narrego. I think Wiradjuri is part of Wagga too, isn't it?
Yes, correct.
Yeah, okay, because as I was telling you guys, I lived in Wagga for many years. So yeah, so I acknowledge those peoples and thank them for everything. So today, recession. What is a recession? Why are they inevitable? It's not a case of, do you think we'll have another recession? I'm going to say yes, we definitely will. When, I don't know. I think because I'm on the wrong side of 60, I've lived through quite a few over the years. The younger people in our session here today in their working life may never have actually experienced a full-on recession. But there's a few things to point out that while we can't always know when the next recession will come and how long it's going to be, whether it be short-term, long-term and so on, it's pretty much a sure thing that another recession is going to eventuate in our economic cycle. Everything works in a cycle. It's not if, but when. It's usually triggered by two areas. And when you look at today's environment, what's happening in the world, and I'm not a doomsdayer, I'm a real optimist, but, one of the external factors and levers, the first one written there is war. There's a couple of wars or confrontations, if you don't want to call them wars. There's a couple of major confrontations going on around the world at the moment. And just on that, because our markets are quite minuscule when they're compared to the major markets of the world, and I'm just talking, say, US, some of your big countries in Europe, China, when they have a dip, it just flows on down the line to us. And we are very aligned to, you've only got to look at our stock market, for example, not that it is the answer of a recession, but when those big economies have a hiccup, or if they have a sneeze, we definitely at least have a hiccup, because it just flows on down. So that one at the moment, I'm going to say, is a real threat as an external issue. Weather events. Chloe and I were just talking about the non-opening of one of the ski fields there up your way. And she was saying how, due to the fires, there are a lot of issues there, of course, which is terrible. But that's devastating for that industry in your area, because all of a sudden, all those people that were employed in that industry now, hopefully they got other jobs in other industries, and hopefully they'll come back, and it snows next year. But that can be that's a very I guess industry related due to weather, but those weather events can affect us all in different ways. Whether it be floods or bushfires, pretty well every pocket in the state has been affected over the last couple of years in some way. Foreign economic events, decisions by different foreign governments and so on can have some pretty big events. Internal issues, these are more at-home kinds of issues. How does our economy currently sit? What's going on in our economy? Are we in a recession? Technically, the answer is no. A lot of people would argue the way they assess it, they think it should change, but that's not for us to make those decisions. However, having said that, let's go to the next slide. You may have heard of per capita recession. So what's being regularly reported at the moment is that even though the country's not in a recession, we've been classified as being in a per capita recession, which we've had 2 negative quarters. Let's use ourselves as an individual. And we all know that the price of fuel, food, interest rates on mortgages have gone up, rents have gone up, everything has gone up considerably, more so probably in the last 9 months, but the last 2 quarters have had negative impacts. So from a per capita point of view, yes, we are said to be in a per capita recession. I should just point out that my figures that I'm talking about today are as at the 30th of June, because the 30th of September's figures aren't going to be released until the end of this month. I was trying to do research over the last couple of days. Bureau of Statistics, I don't know whether anyone has looked through that, can tell you a lot of great information. I could draw certain information about certain things on the 30th of June, but all this kind of stuff won't get released until later this month. I'm keen to know where it sits. So just with my cash flow, so managing the cash flow in recessionary times, and trying to plan to make it work for me or you, our business owners. So little areas such as your invoicing. I've seen so many businesses over the years. I'll say, look, your payments are coming in at, say, 60 days. When did you send your invoice? Oh, I send them at the end of the month, or I send them when I get to them. No, I'm going to suggest that if you're doing that, you need to review your practice. Your invoice needs to be focused on and ensuring that you stay on top of it. If you finish a job, and I don't know what kind of industries everyone is in here, but depending on what industry you're in, when you finish that job, send out the invoice. I just had a plumber, finished the job Monday, I had the invoice Tuesday. Yes, I plan to pay it Friday, but if that plumber hadn't sent me that invoice for another month, I probably may not pay it until he sends it. Little things like that. You know, reviewing your payment terms and seek better payment terms of some of your suppliers. If you're purchasing of third-party suppliers and they give you certain terms, do they give you discounts on volumes? Sometimes that can happen. You know, will they agree to you extending your payment terms? They may want payment in 7 days. Will they agree to extend it to 14 days? The only reason I say you should look at these things now before a recession happens, it's much easier to try and get something like that put in place while times are still reasonably okay, because if times get tough, you'll find a lot of suppliers will go, that's exactly how it is. We're not changing our rules for anybody. This is a very interesting statistic, and I worked for a big organisation once, and when I read that, I thought, yeah, that sounds very true. According to the Australian Small Business and Family Enterprise Ombudsman, 1 in 4 big businesses, and these are big national, multinational businesses, are taking more than 120 days to pay small business customers. That's 4 months. It's a long time, and only 30% pay within the first 30 days. Ask questions. You know, if you're dealing with a big company, sure, you might say, well, I feel that I'm very confident I'm going to get paid. That's not the issue. But by that company, if I did a job for a big company and they owed me $10,000 or whatever it might be, even though I mightn't be at risk of getting that money, if I've had to turn around and buy materials for that job or buy in stock, and I've had to pay that in 7 or 14 days, and let's say I had to pay $3,000 or whatever, I'm now carrying that right up until I get payment, and it's a real problem these days. Before I was doing this role here, I was a small business counsellor, business coach with the RFCS, and I noticed with a lot of businesses, their invoicing was not being done regularly enough, and they often it's very easy to get in this situation of saying, look, I know that person. They could be a neighbour, they could be a friend's parent, they could be anything. I know they're going to pay me. I feel embarrassed to go and ask them, can you please pay me? At the end of the day, you do need to take sometimes, and I know it's harder in a small community, but you do need to take sometimes that emotion out of the equation. And yep, invoice needs to go out 7 days, needs to be standard practice. And sometimes when you put those practices in place, it stops you from feeling guilty that, hey, I just had to send my auntie an invoice for $1,500 and asked her to pay it within 7 days. But that's what my standard practice is. It's sometimes easy to justify, and if anybody says anything to you, you do say this is just standard practice. We send out invoices straight away, and we appreciate payment straight away. Because I haven't put the statistics there, but on debts being written off, when a debt gets past 90 days, or an amount due is past 90 days, your chances of recovering that money, and I'm not talking about multinationals here because you know you're going to get paid, but your chances of recovering that money get slimmer and slimmer and slimmer. They'll go 90, 120, all of a sudden you're at 180 days, you haven't been paid, your chances of recovering are getting less and less and less. So you've got to keep on top of that. Track your profit margins. I'm sure we all know, like working with your gross profit margin. So when I purchase my goods and what I'm going to sell it at, I know I need to maintain that margin, whatever that is, because then all my expenses and so on need to come out of that. What I've seen happen over the last couple of years since COVID, which a lot of people started shopping online. We're going to come to that also, and it placed pressure on a lot of businesses. They started squeezing their margins, and When you squeeze your margin, at the end of the day, it means less profit for the business owner. So, track your margins, and you do need to do your best to maintain what your gross profit margin is, and do that through your cash flow and a business plan, which is what we're going to look at also. So I'm going to use, in a slide coming up, I've got a cash flow forecast that I'm happy to share with anybody too. And I'm going to send this, I'll send this PowerPoint presentation out to everybody also. But I can send you the specific cash flow forecast if you'd like it. And in it, it allows you to put in your sales or your forecast sales, and it'll automatically work out what your COGS will be, your cost of your goods sold for you. So it's all formulated. So I've set it at 30%. So the lady that made it with me, we did it for a restaurant, and we said, look, about 30% was about where the COGS were sitting at. But you can vary that. You can change it to 50 or whatever, depending on your business. But the beauty of it is, if you do that every month and plan and know where your margins are sitting, you can see a problem before it happens, in black and white terms. But we'll come back to that shortly. Cash flow forecast is a must for at least the next 12 months. I'm not going to ask people to show their hands whether they do a cash flow forecast or whether they've got a business plan. But if you don't do one, and it's very common for people not to do one, I will add, when you do one, you'll realise how great it is. And I'm not just saying that because I like them, but you will realise they are quite beneficial. So start planning your cash flow, and we call it a canvas, like a template, so that you can visualise what you want to achieve and where you hope to get. We should all have goals in life, whether it be our business goals or our lifestyle goals. Hey, if you want to go on a holiday to Europe, plan it. Say to yourself, I want to go in 2025 or whatever that is, and work towards that. Open up a separate account or do this or whatever, but stick to your goals on what you want to achieve. It's the same in business. So if you want to maintain a certain profit margin, if you want to expand your business or whatever you might be planning to do with your business, if you plan, you're going to have a lot better chance of getting there than not planning. Look back at what's worked in the past. So in order to try and help you in the situation of a recession, always look back what's been successful. In other words, your strengths. And we're going to come to the SWOT analysis soon too, but look at the areas that have worked well for you and that have given you a good margin. Sometimes some businesses might call it easy money. Yep, not a bad way to put it, because if I know I can sell that, whatever that might be, at whatever the set margin, a good margin, why wouldn't I have it out the front of my shop for people to buy as many of those as possible, which all comes down to marketing. But yeah, a canvas will allow you to map out your income, outgo, your projections and your commitments. Set your goals and monitor and track your progress. Hey, if you need help, ask your accountant or your bookkeeper. Sometimes, I don't know, sometimes other family members, if they're in business too, it's sometimes handy just to ask their thoughts. What do you think? I'd like to think you people would all tell me don't do it. If I came to you and said, hey, I'm thinking of opening up a video shop, hopefully I'd know you all well enough and you go, no, don't do that, because technology's taken that over. But I think you get where I'm coming from there. Are you trading profitably? Do you need, and if you're not trading profitably, why you're in business? And I say that in black and white terms. If you're trading and you're not making money, you're either putting money into your business to prop it up, or you need to make some big adjustments to make your business more profitable. Not all businesses survive, and I'm not saying anyone's business today won't survive in a recession, but you've got to do your best to combat what can be thrown at you if that were to happen. Yeah, how do I? We have spoken a fair bit about this, but how do I construct a good cash flow? What questions should I be asking myself when I complete it? Understand what my COGS are, my cost of goods sold. and my terms of payment, as we spoke about those. Can I go to another supplier and get a cheaper price? I'll come back to that in a minute. What's my cash flow margin, which we spoke about all that earlier? What's my burn rate? Now that one, which effectively is saying the amount that you're spending each month just to pay your overheads. That's things like your power bills. You know, have you put in the state government, Service New South Wales had some really good opportunities to put in downlights of LED downlights and so on. And this is a true story. I had a client who the landlord wasn't happy for him to do that, and I couldn't understand why, you know, and neither could he. And he went to the real estate agent. It's a totally different part of the state, by the way, and the real estate agent didn't seem to care, which I didn't like that attitude. But anyway, in the end, we wrote a letter explaining the reasons why he wanted to do it, and finally someone read it and thought, well, yeah, of course I'm going to, and they allowed him to do it. But it was almost like, you know, that saved him a lot of money, because and if you haven't put in LEDs and so on, they will save you quite a bit of money. Look at ways, should you change suppliers? And I'm not suggesting you should, but have a look at what you're paying. This is a true story, and I'm not a business owner. Only I pay the household bills. I rang the electricity supplier because they sent me an email telling me I'm coming off my plan and that I'm now on this plan. And then at the very end of it, they said, you know, if you want to discuss it, ring us. So I rang them. And I said, oh, is that the best they can do? And the lady at the other end said, oh, no, I can do better than that. I can put you on this plan. And I honestly felt like saying, why didn't you tell me? Why did you send me that and then turn around and tell me that? Anyway, I saved money by making a phone call. And you might think, why wasn't I told that? I don't know. I was on another plan and they just left me on that plan. So unless you speak up and ask what's available, you don't always know. Yeah, what are my accounts receivable patterns? Are they irregular? Try and keep them smooth. If you can, keep your invoices regular. What are my commitments and loans? You'll put this, of course, into your cash flow. And what's my balance sheet indicating about outstanding debts? Look, I could have a debt with the tax office, or you know, whether I've got a bank loan or anything like that. Yes, you need to allow for all those things. GST, I'm not going to harp on GST, but keep in mind, collection of GST is not my business money. It's the government's money, and I'm collecting it on their behalf. So if I accidentally spend it, I do need to quickly reimburse that, or ring the tax office and sort. The tax office are very understanding on my dealings with them, but you would need to ring the tax office and put a plan in place to, to get rid of that. What are my KPIs and goals, and where do my ratios sit? There's a couple of ratios which I'll send out with this PowerPoint presentation. A few key ratios that you want to always focus on because they're very important to help you reach your profitability level. Weigh up the risks of relying on one or two main clients. You know, if my business had a client, a really great client, great payer, great margin, everything's fantastic, but they're 70%. I'm using this as an example. They were 70% of my revenue. That's really high risk. But because even though we might have great relations, if for whatever reason, an unknown reason, they left my business, I've just lost 70% of my revenue. So it's always better to try and spread that risk. And yes, hold that 70% client, but what you need to do is look for opportunities to pull in other new clients, and they might only be a 5% client. Doesn't matter. The more little ones you sometimes get, you're spreading the risk of the what ifs. I just wanted to add, yeah, so cost of goods sold. There was something I was going to tell you about that. I might have to come back to that. Look, there's that cash flow forecast that I spoke about. It's very bland the way it is on the screen, and I apologise, but when you see it in real life, that's just sort of a picture of it, and it's not live. But I'll just point out, you'll see their forecast in the yellowy sort of colour. You slot in each month. It's all formulated, and then you put your actuals in. So each month you're up to date with where you're at, which is so important to monitor on a monthly basis, especially if there's a looming recession. But even if there's not a looming recession, to do things like this and to know where you're at each month, you can get on top of things immediately if you see a variance on things slightly swaying that way or that way. The beauty of this, though, you can put in your actuals and then it'll automatically just bring your actuals down, and then it'll always work. It works across for the rest of your forecast, but it'll keep you update each month. You can put in your loan commitments and so on. Cash flow planning, we're still on cash flow. Yeah, additional pointers, just a couple of last pointers, and we've possibly spoken about these. Yeah, assess your suppliers and agreements. Oh, that's right. I now know what I wanted to say about that. And seek out stronger relations and better terms. I'm now going to almost say the opposite of that. I had a client in a town, and I said, okay, based on some benchmarking figures on what you're paying for your materials, it was quite a big business. I said, you're way above on your COGS. In other words, you're paying too much money. And they knew that, but they said to me that they would not be prepared to leave their current supplier because, and they're all very valid reasons. Number one was if they ran out of something, they would deliver it to them, basically at their door. Number two was, even though they're paying a premium, if they had to ring that supplier and say, I'm sorry, I can't pay for 14 days, the supplier went, yes, not a problem. So there's a whole lot of reasons why they're paying a premium. But my response to them was to try and get a pattern of a year where you're not asking for extension of credit or anything. And they actually went and got a small line of credit for that purpose, because then they're in the box seat to actually ask for sharper pricing. It's working for both parties at the moment, and they both have good relations. But at the end of the day, if you want to boost your net profit, if you can lower your COGS, it'll all just flow down, and your net profit at the bottom should improve. Yeah, pay down debt quicker. I know that's easily said because, anyone who's got a debt, and I'm one of those people, sometimes you look at it and you go, oh, you just pay. The rates have gone up. I'm not going to sound like doomsday, but if you can pay a little bit extra, and it might be $50 a week, it might be $100 a week. $100 a week's $5,000 a year. It all adds up, and the quicker you can get that debt down, the more money you will save in paying interest. Some people in today's audience, I'm thinking no one in today's audience probably experienced when home loan rates were like 19.5%, because that's what they were back in the 84, I remember. Oh, did you? Sorry,
Yes.
Kathy. Yeah, it was horrible, Kathy, wasn't it?
But anyway, back to work.
Yeah, but it was horrible. But I don't anticipate, and hopefully we never ever get to anything like that again. But by getting ahead in your loans, it allows you to, if something happens, and I was a couple of thousand ahead in a business loan, you find most lenders with business loans these days will allow redraws. They'll sometimes, I'm an ex-banker, by the way, I didn't say that, but if people came to me with a business situation and they explained their situation and they said to me, I need to go interest only for 12 months because this is the reason why, it was my job to do my best to try and meet that need, because at the end of the day, as long as there was a valid reason and so on. So sometimes you can ask your bank to help you out in situations. But I'm a true believer, if you can pay extra and get ahead and get that buffer, get a bit of a buffer, it's so advantageous in a situation of an unforeseen circumstance. Focus on your gross profit margin. Yeah, we've spoken about that. It's where you can lose money. You can be in a business with revenue of $5 million and not make any money because your gross profit margin isn't high enough. you know, it's fine to say, hey, I'm churning over $5 million. Yeah, we'd all go, hey, I'd love to do that. But if you're not making any money, you may as well churn over 500,000 and make, if you can make 50,000 out of 500,000, you're better off making that than nothing out of 5 million. Good practice to look at ratios. We spoke about those earlier, and performance of your business. Cash flows and business forecasting, and the importance of monitoring monthly, as I showed you that forecast. The importance to tweak things as you go. So don't do a cash flow and necessarily just leave it set in stone for 12 months. There's no, or you should actually start varying it slightly. You know, if your COGS have gone up and you'd originally thought that your COGS, you'd set them at 40%, maybe they need to go to 41% or 42%, depending on where the market has moved. One big factor that I don't know whether we've seen the true impact yet is just the price of fuel and diesel. I'm not sure what you guys are paying down there, but I went to fill my car up on Saturday or Sunday, and I stopped at $100 because that's what I thought. I didn't want to put any more in, but I think if I'd kept going, it would have gone up to about $140. It's a lot of money to put petrol in your car, but that flows on to the production of, my packet of cornflakes through to my whatever's. The cost of production, of course, is probably going to go up. So moving on from cash flows, I put this slide in just, and I know I'm sure you would all understand this, but just understanding your break-even point. I know it's a pretty basic concept, but you know, your fixed costs and your variable costs, your margins, and then your break-even point being the amount when the total sales equals the total expenses. So your break-even point, some people, I don't believe you should, but some people will sometimes include their wage, what they'll want to get out of it. But I actually feel that you probably should work it before your wage, because your drawings or your wage, you know what they are going to be when you set your goals, but you need to know what your break-even point of just your business and running the business, and that's paying your staff, but not necessarily your wage. But you can do it whatever way you want to do it, but it's an interesting thing to do. Has anybody got any questions? I know I'm rattling off here pretty quickly, but has anybody got any questions on anything? No, so I'll keep talking. So we've left cash flows, but your business plan, how to make your business plan work for you, whether it be recessionary times or non-recessionary times, allows you to stand back and just imagine standing on a balcony and looking down into your backyard. And I use my house as a classic example. Parts of the backyard I like. I've tidied up. They're good. They're just nice sitting spots. If I turn to other parts, I go, oh, yeah, I remember when we pulled that up 3 years ago and we still haven't done anything with it. But I look at it and I go, oh, I will do that one day. It's very similar to looking at a business. If you were able to stand on a balcony and look down into your business, you would see a lot of positives. You would see a lot of things that you like, but you would see a few areas where you'd go, you know, I wish I could, or I should have, or why don't I, and so on. And this is where we're going to be moving on to like a SWOT analysis, to have a look at strengths, your weaknesses, your opportunities, and your threats. But just firstly, when planning a business plan, stand back and look down and think about beyond today, but your vision of where you want to be. It'll help you uncover your business potential and your opportunities for growth and diversification. Plan for the what ifs. It'll help you plan for those what ifs. This happens, what if that happens. It'll make you more resilient, hopefully in tougher times, because being prepared, like that old saying, knowledge is power, and it's exactly the same thing. So if I've got a bit of knowledge when something unforeseen happens, let's use recession, it's going to be much easier and less stressful for me to manage that if I've already addressed some options that I might have in the back of my head, where I think, you know what, if this happens, I think I could do this, or I could do this. Yeah, plan for the what ifs. Consider future needs such as any capital, marketing, staffing. Keep the focus on track with your goals. A business plan is not something you do today. It might take you a month even to do it. Don't feel you've got to sit down and have it done in 2 hours. And it's not the kind of thing you just throw into a drawer or put it into a file into your computer. You should have a if you want to do a complex business plan, and I'm not crazy about big long 10-page 15-page business plans. I love business plans that are about 2 pages, or if you can squeeze it on one, great. Print it out, put it on your wall. You might want your staff to see it, but put it somewhere where you can see it regularly and you can refer to it. So your business plan should be tweaked regularly, because as things change, and for whatever circumstance might happen, you might have to alter your business plan to meet the ongoing goals of what you're trying to achieve. Put that question there. When did you last look at your business plan? I'm not going to ask you to tell me, but most people, when I ask that, are probably none of those answers. They're probably out here because they haven't got one. And it is very common. A lot of businesses do not have a business plan, but ideally, I would love everybody to have a go at one, and I'm going to show you a link to one in a minute. And I'd love everybody to even look at it at least once a month. And it might only be a 10-minute look. Grab a cup of coffee, sit down, go, where am I at? Have I achieved what I was hoping to achieve? Excuse me. This here, this is just contents of, obviously that's a 16-page or probably more business plan that Lisa, the lady who put this together for me, has pulled that off a site, probably a government site, but advanced planning on your business plan. So before looking to create your business plan, sit down with a cup of coffee and make some preferences on your performance and specifically measurable. So it's no good me saying, I want to increase my sales revenue by 7.5%. It's got to be, I want to increase my sales revenue by 7.5% by the 31st of December. Or if I want to break it down, I want to increase my revenue by 3% by 31/12. You might then, with January and February being traditionally quieter, depending what industry you're in, you might then say, well, I know it's going to be quiet in those months. I'm now going to allow myself an extra couple of months to try and get to that 7.5% by May or something like that. But try and be realistic. So what you're looking to achieve and how do you plan to get there? Set your goals, your KPIs, and tick them off as you go. Who's involved and who should I seek input from? If you've got staff, sometimes your staff, they'll as long as you've got good relations with them, they'll sometimes come up with a totally different perspective of what you might think is doing well in your business. And I just reckon it's so beneficial to really keep an open mind and maybe have whether you've got 1 staff or no staff or 2 staff or whatever, but have a staff meeting with a cup of coffee with how many staff you've got, and say to your staff, what do you see in our business today of if you could change it, what would you change and why? And it's not saying you're going to necessarily accept it, but it's just having an understanding of what their thoughts might be. And from an older person's perspective, sometimes I'm amazed that, there's some brilliant minds out there, young people's minds, and I go, wow, that's a great idea. I never thought of that. And I'm very open to change and opportunity and doing things better. And some of the ideas that some young people will come out with, you think that's such a great idea to consider. It might save me money, but it might be a new way to market things. The whole social media. I don't know. I'm not on Instagram. I'm told I should be. My wife is, and she shows me stuff all the time, and all these stuff that comes out from all these places, and they're mainly pictures. And I love visuals because they're just quick and easy. But that whole market and the young ones are definitely into all that. if you're looking at different ways to market your business. Yeah, regular review of your plan and fine tune it. It's a living document. It's not something you do and you put in a drawer. Cover off marketing. Now, we touched on marketing briefly there on whether it be something like Instagram, Facebook. If you're going to do something with Facebook, I knew very little about Facebook and Instagram until I became a counsellor with RFCS, and I learned it mainly from customers, where some of them didn't want to have to pay somebody to do their whole marketing. I'm going to say that sometimes it's very beneficial to go to a professional to get it professionally done, but at the same time, if you're capable of setting yourself a plan that twice a week you're going to post and you're going to put pictures, I think pictures are very powerful. It just gets your business name in the forefront of the reader. I mean, I look at Facebook probably, I don't have it on my phone because I look at it too much, but I look at it on my computer when I'm eating breakfast, and I look at it usually after dinner. And yes, I get sent all this information from different companies about different things, and even though I might be interested, I see their name, I see their business name, I see their logo, and if I keep seeing that all the time, I actually know that if I wanted to buy that product, or if I thought about that, their name would more than likely come to mind. But I'm no marketing guru by any means. Advertising, if you're going to spend money on advertising, spend it in the areas where it gets uptake and it gets noticed. I'm not going to talk about the different areas of advertising. I am going to say that the advertising dollar has changed. What might have worked 20 years ago may not necessarily work today. Sorry, I just get that off my screen there. Yeah, may not necessarily work today, but and that's where sometimes some of your young staff they'll tell you what the current trends are. This one here, yeah, so business plan essentials. This one here will let me go to a full, business plan. So, yeah, this is just a one-page action plan, which is pretty well a business plan, but it's just called an action plan. Put in your timelines, your descriptions. So Elise, our marketing lady, I think has filled this in for me. Yeah, where our business is now. So she's just put annual profit 150,000. There's 4 staff, minimum vacancies filled. Where our business will be in 6 months. So she's done a timeline there. Be good to put a specific date though. Don't just put 6 months. All staff trained in customer service, profitability improving. Training of your staff, if you've got staff, is really, really important. Or if you're the sole operator in your business, keeping yourself updated with technology and the trends in your industry. Where my business will be in 3 years. She's written those comments. Once again, put dates, put specific dates down there on your timeline. Your strategies on how you're going to get there. Training is such an important thing. It's training these days. The beauty with computers, training doesn't have to cost an arm and a leg. You can get some fantastic training programs. Some of the government sites will have them. Or you might have to pay a few dollars to get certain things, but whether you're after customer service training or admin training or whatever, there's some really good training sites out there. Put a timeline on that and who's responsible. Sales manager might be yourself again. She's put IT manager there. Well, most of us don't have an IT manager, but that would probably be yourself. As a small business owner, you tend to be everything. Improve customer service. I want to focus on this one. I don't know whether anyone's ever been to Japan, but if you have been to Japan, you'll understand what I'm about to say. That Australia could learn a lot from the Japanese. When you go into a shop in Japan, it's almost like saying to yourself, why are these people being so nice to me? The service levels are beyond, even down to when you leave, they'll bow to you as you leave and say thank you. I'm not saying Australia should do that, but what I'm getting at is if somebody leaves your shop with the experience of, gee, you know, they're nice people. Or gee, they had a chat. I've been to shops, I won't name them, but I mean, I'm in the Southern Highlands, but I've been to one or two shops here where I just don't go into anymore because I'm the kind of person who loves to have a chat. I'll walk in and say, "G'day, how you doing?" And if they don't speak to me, I ain't going back. You know, just, and I know a small community like yours, I'm sure you would all respect and greet your clients properly, but I know some shops I think have trouble with tourists. They don't like tourists. Well, hey, tourists usually have money. Always be nice to the tourists, I reckon, because often they're the ones who'll sometimes spend money in your business. I won't harp on that, but you know, you might want to, well, naturally you will want to increase your sales, but start being specific and so on. Increase your customer base. I don't know whether people are keeping a database of their clients, but every time you sell something to a client, you should be trying to gather a bit of information on them. And you've got to ask them too, and you might have to ask and feed it in. Like you go to a lot of the big stores these days and they'll go, "Oh, you know, do you have a whatever with us?" And I'll go, "No." And they'll go, "Well, if would you like to?" And I usually go, "No," if it's something, you know, just a big chain store. But at the same time, they'll usually ask for your email address. And next thing I do, I can get hammered with too many emails and I opt out of it. But from a smaller business in a smaller community, if you can gather emails of people that do buy from you, if recessionary times do come, you don't bombard your client with emails twice a week. But at the same time, you've now got they've agreed for you to hold it and to send you any updated information. You've now got their email, and you might even just send out something basic, a picture of your logo and your latest product, whatever that might be. And it's just putting it in the forefront of people's minds and having that information, knowing those people have purchased from you previously, you've got a good chance that they're going to come back. And even tourists, you know, you're lucky enough to live in a nice area where once people go to your area, they usually go, "I want to go back one day," and they will. And they might go to your shop, or they might have gone to your business 3 years ago, and rest assured, when they're back in town, they'll remember having gone to your business, and they'll more than likely walk into your door again. Human nature. I'll go back to this here. Sorry, I'll just escape out of that. I'll just bring that back up. Yeah. Any questions, anyone? Nope. Okay, so now we're moving on to the SWOT, which is your strengths, weaknesses, and your opportunities and your threats. So, of course, your threats, of course, is recession, the possibility, or as we know, we're already we're on the verge, possibly in recession. If we have 2 negative quarters, we may never ever get it, but could happen. So your threats and your opportunities are classified as external factors, so they're sort of out of our control. Some of those examples would be your political and environment issues that we spoke of earlier. Legislation effects. Imagine, I'm not saying this will happen, but you know, will GST always be 10%? I don't know. Let me use superannuation as an example. I think it got introduced at, was it 7 or 9 or 9% or something? It's now 11. It's now 11%. And yes, it's going to go up from there. So yes, so your strengths and your weaknesses, I said, are classified as your internal factors. So they're things that you can actually focus on and try and do your best to work in your favour. So your examples might include the capabilities of your business, your competitive of your business, what kind of advantage might you have over your competitors, your location, do you sell online, all those sorts of things come into play. What are your strengths? Always fall back on your strengths. There are certain things that every business will do really, really well at, and always value those and always keep them in your back pocket, so to speak, because they can sometimes be the area where you go, well, if that didn't work and I'm struggling with getting that opportunity to work, I need to boost my strength on whatever sales and whatever that might be. How can I better manage what's under my control and better prepare for what's not under my control? How can I capitalize on the external opportunities, and how do I best manage my threats? So if I let me go also into competition. When you're in a small community, and I live in a small community as you guys do, often businesses see anything of a similar nature as a competitor, and they don't talk to each other. And even down to I organised when I was in a bank a lunch for a certain industry, a professional industry, and most of those ladies and gentlemen that came along had never met each other. I just couldn't believe it. Like I was introducing them, they go, "No, I've never met this person," and they've all been in town for years and years, but they don't. They all saw themselves as competitors, and they never socialised in any manner because they were treated as a competitor. And we're probably a bit bigger town than you guys too, but and we are 3 towns. We're Mossvale, Mittagong, and Barrel. But having said that, I couldn't get over that they didn't collaborate in any way. And I want to just give the example that if I was a window cleaner, cleaning shop windows and doing a bit of resi work, and my neighbour was a pest controller, there's no reason why we wouldn't collaborate a bit together and try and feed off each other's, when I say client base, feed off each other's industries is probably a better way to state it. Because, you know, if I'm cleaning windows and I have a website, imagine if I started advertising the pest controller logo and so on my website. Now, most people would go, "Why do I want to do that?" Well, it's sort of in a small community, it sort of cross-collateralizes your help of each other, and vice versa. So that pest controller person would at the same time start advertising my window cleaning service. And because our client base is very similar, even though we're different industries. But try and think, try and not always look at a competitor or the thought of collaborating with another business as a negative. Try and think of it as more as an opportunity. And I'm going to call that a very low cost opportunity, because it doesn't cost much money for anybody to do something like that. But I know that's just an example, but that's the kind of thing you want to try and look outside the square a little bit on. Excuse me, I'm going to have a quick drink of water there. Excuse me. So yeah, consider ranking your SWOT items. So when you sit down with a cup of coffee, piece of paper, I still love the old style, a pencil and a piece of paper, and write out, draw it up, cross in the middle, draw it up, strengths, weaknesses, opportunities, and start writing out what you think your main threats are, what are your strong points, what opportunities, what are areas, and sky's the limit. So, don't think about cost at this stage. Just go, you know what, I'd love to introduce, I'm a window cleaner, I want to introduce a shower screen system where you don't have to wipe it. And I know there's some out there. I wonder what that's going to cost me. I don't know, but it's put it down as an opportunity of where I might want to expand to. Make sure, do your research. Is the industry that I want to expand, is it a growing industry, or is it one that's going that way? You want to pick one that's at least going that way. But sit down, as I say, with a piece of paper and just try and work out what you see your business and where you'd like to go. Because in the time of a recession, things like that you'll reflect back on. And when I said earlier today that if a recession were to hit, and we are, as I said, we are in a per capita, said to be in a per capita recession, but if an economic recession hits the country, having thought about these things prior, it just lowers the stress levels, and you can sit down and just be more logical about, righto, I've thought about this, I've thought about that. I know that if I want to introduce that product, it's going to cost me I'm making this up, $10,000. Have I allowed for that, or do I have access to credit? Have a look at these things. What's my ability to borrow money? Should I need to borrow money if I want to venture out into a new area? Is there a competitor that if a recession happens that they might look to close up shop? All these sorts of things can happen. But by thinking about these things rather than waiting for them to happen, it'll just put you in a much better preparedness. This is just a play on SWOT, and some may have heard of it and some may not have heard of it, but it's what they call the towers, which is a rearrangement of words. So your threats and your opportunities, and your weaknesses and your strengths. And it's a bit like what I was just saying. You could nearly print this out and jot down with a pencil on what your top 6 strengths are and so on for each thing. And then when you go on the graph, you go, okay, my strengths and my opportunities. When I say it's pretty basic stuff, it sort of is, but it makes you think. So what strategies can I use where my strengths will maximise my opportunities? So I'm going to give an example there of possibly if my strength is I know I can sell that product at the best margin in my business, I'm going to focus on that strength because I might want to introduce that new product or create that opportunity for my customers, but it's going to cost me, I'm just using $10,000, $20,000. So yes, I can borrow money, but if I can focus on my strength to try and get me through to the opportunity, it all makes sense. But what about, let's have a look, weaknesses and threats. What's that one tell us? We need, this will be a hard one. We need strategies that minimize our weakness to avoid threats. Not an easy example or question to answer, but knowing what your threats are, you're better off knowing what your threats are and what your weaknesses are than not knowing. That old saying, as I said earlier, knowledge is power. Now, knowledge doesn't have to necessarily be I'm the smartest person in my industry. No. Knowledge basically just means that I'm aware of what's going around me, what my threats might be, what my weaknesses are. Don't put up a barrier to your weaknesses. We all have strengths, we all have weaknesses. So anyone who says they have no weaknesses, they're lying. So that little graph there, I really like it. It's a brain thinker. So it's the kind of thing that just makes you think about, where do I position myself on this? And when you fill in these bits down here and you'll go, your strength might be customer service, might be one of your main key areas, and people go to you because they go to you over a competitor because they know you've got a great knowledge and you've got great service levels. Having said that, to combat that against a threat, if you go down to strengths and threats, strategies that use strengths to minimise your threats, it's not easy to come up with it, but if you know what your threats are and you've got it, don't go, I haven't got any. Find out what your main threats are. Can a competitor come into town? All that kind of thing. Is the internet an issue? People doing sales on the internet. This one here quickly is called the pestle, and they use this kind of stuff in boards, company boards. I know we're not companies, boards and so on, but it's really relevant because when you look at some of the stuff that big business looks at, it's exactly the same as small business. Big business is exactly the same as small business, but bigger. But they still have the same issues that you have, but just in a bigger way. So political, we're pretty lucky in Australia when you look around the world where we have got a fairly stable political environment. Without getting into politics, it doesn't matter who's in power out of the major parties. When I say they're very similar, they're very Western culture style politics. Inflation, this is a big one. So the economic, this is affecting us now. So your inflation rate, it was high 7s a couple of months ago. Last I read, it was 6, I think. Fortunately for all of us, the RBA did not put the cash rate up last week, I think it was. which is good. But inflation is an issue. Just linking that with demographics and social, it's interesting. Part of the reason why they're putting the rates up, of course, is because people keep spending. However, when we listen to the news, there's all this mortgage stress, and people, certain industries, they aren't spending. The people who are spending, from what I've been reading, are probably the over 55s. I'm not saying you should just target that market, but it's the over 55s. The share market's still healthy. Either they've got a steady income stream out of possibly out of a superannuation fund. There's a lot of Sydney siders. I don't know whether they're moving down your way. They probably are. They're moving down our way here. They can sell out of Sydney, of course, and buy a cheaper house, and they're still spending money. Now that's part of the reason why, I guess, inflation, because we're all still spending, but there are certain segments of the market that aren't spending and that are really feeling a lot of pain. Technology, I'm no techno savvy person, but I'm very much well aware of the impact of technology and the importance to keep up with it. I ask my kids things. Ask your kids, ask family members, ask your staff. Often you'll be amazed at some of the things they tell you about what's happening technologically wise, and read things on the internet. There's plenty there to research. Legal, most small businesses aren't affected by any major legal changes these days. I'm trying to think of an example of one. Well, no, your awards and so on can all get changed, and minimum wages, I guess, and those sort of things can effectively all come out through that. And the environment, this is a big one, of course. Climate, weather changes, production, impact on the environment. Does climate affect your business? If it does, I guess it can affect any business, because I know around here, if we have really, really bad weather, the tourists don't come. And it might also happen in your region. But climate and weather is a bit of an unknown. And I don't know, just be aware that, this is what can happen. And maybe down the track we are going to be having more storms or floods or more damage and so on. But hopefully not. Make use of your strengths. This is basically, we've gone over this, so I won't harp on this. But we have gone through most of those things. But your strengths are always going to be your fallback. So if I'm really, and it's human nature, if I'm really good at doing balance sheet work or something, if I was a finance person, I would always tend to go, I'll do that first because it's easy and I like it. But if it's my best margin, why not? If you're selling products or you're not properly accounting for the time that you're spending on a client's job, reassess what you're doing. I worked with a tradie recently, and the amount of pre-work that he was doing at home, he'd go and do the quote, and then he would, he'd go out to different suppliers and gather stuff, and I'd say, have you factored all those hours, and there might have been 10 of them, into your quote? No. And also he hadn't put his hourly rate up for 3.5 years. You have to. If you haven't adjusted your pricing in the last 12 months, you need to look at it. I'm not going to say you have to put it up, but you need to look at it. Once again, just the last bit on business planning, additional points. Promote localness, as I said there. Try and, if you can work collaboratively with your business, other business partners, you can actually leverage off each other a bit and really promote. I'm a huge supporter of localness and local business. I try and buy everything in my area here because I live here. I'm not an internet buyer, even though I can sometimes buy it cheaper, but I've also learnt, I go and buy something on the internet and it either breaks or it doesn't fit me. I don't go there anymore. You look to benchmark your business. Most accountants will often have, I think we've still got it, a benchmarking program where they will feed your figures in, and they'll be able to supply you with information on where your business sits, and it's all worked out on ratios and percentages. It's a really good tool, but most accountants have that. The ATO also have it. The only thing with the ATO, they'll give you a really wide band. So they might say, your gross profit margin was whatever, and the average is that, and that might be from 15 to 25%. No, we want to bring that down to that. Where some of these programs will actually be more specific because they gather all the information Australia-wide. Move up a level on service. We spoke about that. And I'm not saying you're not offering good service, but gee, service goes a long way, I reckon. Are your staff cross-trained to better deliver efficiencies for your business? If you don't have staff, I'm going to say, are you cross-trained to better deliver efficiencies for your business? And do your staff, or do you understand what you're seeking to deliver for your business? As a business owner and an individual, I know you do because it's your business. If your staff don't understand it, start having weekly meetings, or they don't have to be long, but a 5-minute get together. There might be 3 of you working in the business. There might be 30 of you, but all get together, cup of coffee. What's happened this week? What do we hope to achieve this week? Hey, how did that go last week? Praise your staff when they've done well. It doesn't have to be monetary. Sometimes the biggest buzz is when your boss says to you, what a great job you've done. Do your staff enjoy what they do? Big thing. If they like what they're doing, they'll work well for you. You tell them you appreciate their work and so on, which we just spoke about there. We're going to move on to diversification. Time-wise, we're going okay. Why do it, and how will it boost my business results? We've spoken a little bit about diversification throughout the session, but excuse me, if you link your cash flow and your business plan and try and get them into sync, and does it all make sense? And keep in mind, it's for you, by you, but does it all make sense on where you want to go? It'll help you make decisions on diversification, on should I bring in a new product? Should I dump that product? If it's not making me money, have a good look at why am I doing it? Should I diversify into something new? Do I want to have to take on any new risk, or where does my risk factor sit? And depending on the strength of your business, you'd know where that sits. Assess your SWOT, your TOWs and your PESTLE. Are they in line with your cash flow and your business plan also? Assess your capacity and opportunities to diversify. In other words, if it's going to cost me money to bring in a new line, or if I was going to buy a competitor's business, what are the risks? Years ago, I can remember dealing with a client who had a well-run, very profitable business, and they thought about buying the shop next door and expanding their shop space. But they came to the conclusion, which I was trying to guide them through to come to the conclusion of what was best for them, that by taking on that extra rent, and I can't remember what it was, but it might have been 80 grand a year or whatever, were they going to actually sell more product? And the answer was that they felt was probably not. They might sell another 15%, but sometimes you got to think, well, expansion into bigger doesn't always convert into better profit margins. So all those sorts of things have to come into play. Assess your capacity and opportunities to diversify. Make use of the business model, as I said there, that canvas that we've had on our screen. Sit down. A pencil and a rubber is better than a pen because you can just jot stuff down. Ideas that come into your head, have a piece of paper at your desk. Sometimes I'll come up with ideas when I'm doing something and I don't know, something will pop in my head about some other idea about something I was thinking about doing last week. And I go, I must remember that. I write it down on a piece of paper or a stick-it note because I go, yeah, I must slot that into whatever I'm doing with something else. This is the business canvas model that I was just talking about, where you could sit down and, work out your key partnerships, what your key activities are. They're all self-explanatory there. Your customer relationships. I'm going to say you've all got good customer relationships, but can you improve them? your key resources, your cost structures, your buying power, and your revenue streams on what are you mainly selling. It's just a guide and a canvas, and you mightn't necessarily want to use that, but it's a handy tool to have, and just to refer back to. So diversification benefits, you budget and plan for the future by diversification opportunities. If this is easily said, and I apologise, I don't want to sound like, just do this, but if you can set aside funds, if able, to be ready to make a move on any new opportunity. If in your mind, if you plan that you want to, as I used an example earlier before we came on stream, I was talking to Chloe and I said, if you want to go to Europe in 2025, what do? You might open up a separate account and you save for it. And that's what your goal is. I mean, that's a nice holiday goal. Everyone should have personal goals and business goals, but it's the same with business. So if you know that you would like to one day diversify into a new area, try and set aside funds. Or what opportunity have you got to borrow funds? What credit have you got available to you? And there's no reason why you can't go and ask your banker or your broker or whoever you're using on, hey, if I was looking at borrowing 50 grand or whatever, where would I stand at the moment? And I'm sure they'd be happy to help. New services, new opportunities. Look at your SWOT once again. Do a SWOT analysis. Work out where your risk sits and whether that risk is acceptable to you. And what's your fallback, plan B and plan C if it doesn't work. Allows you to get better competing your market, and get the edge to be more resilient. So by having more product or more options to do things in your business will make it more resilient. It comes back to where I said, if you've got one client that does 70% of your revenue, it's a little bit the same with this, where if I've got a business, I'll use, I don't know, whether I own a shop selling shoes, I'm making this up, and I haven't traditionally gone into sports shoes. Is that an opportunity? What's the competition in town? What brands might I bring in that other shop doesn't have? And do I feel, how many do I need to sell to make it profitable? Things like that. What kind of links do I have with the local basketball club? Get involved in stuff like that. Get involved in as much community things as you can. Number one, they usually always have great social events, but it gets you integrated in your town. Allows you to better compete in your market and get an edge and be more resilient. Collaborate with others, as we said, industries or businesses, and help each other grow. The cleaning, I think I used that cleaning example and the pest controller on that one also. But the beauty of that is when the pest controller sends out, maybe emails about their business to clients, or even just their invoices when they've done work, if they can promote your business, you can't, it's free advertising, isn't it? You can't ask for anything better, I don't reckon. And word of mouth, I still feel in a small community is really, really valuable. Diversification planning, additional points, explore new markets, as we've said, expand beyond the norm. Look for new opportunities and how to do that. Work collaboratively with other local businesses. I'm assuming you would have a business chamber in Tumut also. Most towns do.
Yes, we have one in Tumbarumba and one in Tumut.
Oh, super. Look, hopefully a lot of the local businesses are involved in your chamber, because chambers are just a good networking organisation. You can, sometimes they get benefits on all sorts of things too, where they can offer their members discounts occasionally. But the benefit I always see of being in a chamber, number one, it gets your business known within all those other businesses that are involved in the chamber, and number two, it's just a great networking opportunity. And you can bounce ideas off people too without asking specific questions of them. You can sometimes just get an idea of what their thoughts might be about things that are happening. Be responsive and in touch with your industry. Once again, chamber's always good. And what trends are evolving. Keep current with product ranges or service offerings. This one here, I just want to quickly show you. You may have seen this. This is off a government site. It's a fantastic site, this. So when I send you this program, you'll get it. There's currently 553 grants available out there. So if I'm in, when you see it, it tells you whether they're open and when it closes. So that one there, yeah, that one there is about that. These are Australia wide. So if I go start now, and I want to go New South Wales, and I want to pick an pick an industry. Oh, I don't know. What do I want to do? Oh, let's just go construction because it's easy. There, now it's going to tell me all the grants. There's 132 of them in the construction industry. Fee-free training for trainees. That's a good one. It's got 80 days left. So all these things, all these are grants. These are government grants that are open in New South Wales in the construction industry. So if you went in there and put in your industry, you would see what might be available. The crazy thing about a lot of the grants, and I never realised this until I joined RFCS. I wasn't aware that a lot of them even existed. It's governments, they put them out there, but it's very hard sometimes to advise people that, hey, did you know? I'll use a cafe for example. It closed, I think, last September, but there was an alfresco grant of $5,000. Fantastic. Any cafe that wanted to expand a bit and create an alfresco outdoor area, you can get a $5,000 grant. Super. Did many people know about it? I'm going to say probably not. But tapping into something like this, it really keeps you updated with stuff. So I'll send that out. Yeah, let's just escape out of that. And we're nearly finished, guys, too. I appreciate we're nearly at the full time. But that's a fabulous site. That I've sent that to many customers. Just lastly, the 4 pillars, and this is a RFCS document. The importance, whether it be recession or not recession, but the importance to have these 4 pillars in place. I'll start off with the business itself, which is what we've been talking about, and the success indicators and focusing on your business. Yes, I know some people, a lot of business owners don't work 40 hours a week. I know they work a lot more. But at the same time, as the business owner, you've got to realise that there's important areas such as you and your family are all part of these 4 pillars, and you need a good network. In other words, you might do your own books, or you might use a bookkeeper. Get to know your bookkeeper, get to know your accountant, ask them questions if you need help. You use your family, bounce ideas off your family. Don't work 7 days a week if it means bringing in somebody on a Tuesday, so you can, if you're open 7 days, for example, but you do need to have time away from your business, partly so you can sit down and do things like your cash flow and your business plan. Righto. That brings us to a close, and I'm sorry a couple of people have recently left, and I apologise. I believe I had an hour and a half. Sophie,
yes, you've done really well.
Well, I'm sorry that some people have recently just left, so I appreciate though that everyone's, it's dinner time, put it that way, and people have families. But hey, look, I would love you guys, and I would ask you, please, would you please mind scanning that, because it helps. It helps me for your feedback, and it's please be honest. I hope I've been able to help you with a few ideas and just chat about the what ifs and the way to try and combat a possible recession. But the thing I like about putting this together, yes, it's recession related, but it's very much anytime related, because the kind of information and things that small business owners should be doing, you should be doing all this before you're in recession. And I'll keep using that slogan of knowledge is power, and it's very true, because the more you know, the less stress you get, And sometimes making decisions when you're stressed is the worst thing you can do. We've all been there where we've gone, oh, gee, I wish I hadn't made that decision, or I wish I hadn't done that for whatever reason. And often you look back and you go, you know what, if I'd known this, this and this, it would have made my life less stressful. And sometimes you don't realise that till you go through life, and you get to a certain age and you go, yeah, look, I know when that happened, or when that happened, or when, as Kathy said, she remembers when rates were 18 or 19%, and it was awful. But I don't know, we all managed. Most people pulled through it, but it was pretty horrible. But interestingly, we didn't have all these discretionary things to spend our income on, like the internet, mobile phone, Netflix, or all the other things that are out there now that we treat as a norm almost. But look, has anyone got any questions? No? I hope. Yes, Sophie. Yeah.
I was just going to say, no, I think you provided a great foundation and a broad range of information as well. I think we've got more than we thought we were going to get out of you today, so that's been fantastic. And just really appreciate your time. And while I've got the floor, I'll just say thank you from SVC as well for coming along and being part of our Small Business Month activities, because, yeah, I think you've been a wealth of knowledge, if you don't mind the pun.
Oh no, thank you. I enjoy doing them. I've done quite a few for different areas around the state, and yeah, I do them on all sorts of different topics. So I did one recently on like finance and banking, and sometimes as an ex-banker, you assume people know. You sometimes assume people know what their bank's looking for, and but most people don't, unfortunately. And just having that little bit of knowledge about, if you're going to go to your bank, they're going to ask you this, and this, and the old 5 C's of credit, and the bank will be making decisions behind the scenes, so to speak. And if you know what they're looking for, it's sometimes easy to present your case. Little tips like that sometimes. Being prepared, and knowledge.
Yeah. No, thank you so much.
Oh, no, thank you, Sophie, and thank you, everybody. I really appreciate having the opportunity, and hopefully I'll have another opportunity if there's anything else, that you feel your community might be interested in.
Absolutely.
Happy to help.
Yeah, thank you. I'll stop the recording now.
Oh, thank you. Yeah.
There we go.
Yep.